Welcome to Trends with Benefits, a podcast by Van Eck with a forward-looking perspective. We explore new ways of thinking about the markets, investing, work, and life. Here's your host, Ed Lopez.
Welcome to this live special recording of Trends with Benefits. I am Ed Lopez, and today our guest is Jan van Eck, CEO of Van Eck, and we're going to be talking about cryptocurrencies, specifically how cryptocurrency is disrupting finance and the investment opportunities that you might find out there. Jan, thanks for joining me this morning.
It's great to be with you, Ed. I think this is my first Trends with Benefits.
Yeah, I was thinking about that. Maybe we did one early last year or something like that. And you know what? I didn't get to ask you any trend or fad questions, so I'm going to do that at the end of this. But maybe one quick trend or fad. I think I know the answer. Cryptocurrency, trend or fad?
Trend.
How many times have you thought about cryptocurrency today so far?
2 hours, I would say, out of my 5-hour morning so far.
I think to get started, we're going to talk about how cryptocurrencies is disrupting the financial services industry. But I want to put that into perspective because Van Eck has been out there as a firm educating and talking about cryptocurrencies for several years now, even before we had product. And I think it'd be a really helpful perspective to get an understanding from you about what you saw happening in the space. I mean, when were you first introduced to cryptocurrencies or Bitcoin, and what was that aha moment for you?
Well, it's funny, at the Bitcoin 2021 conference, I felt everyone should have a badge saying the year that they sort of fell into the rabbit hole of crypto. For me, it was 2017 when, corporately, we determined that this was an important investment option that we should be talking about as a firm. I had been aware of it for 2 or 3 years earlier and, had the proverbial family members and friends who had been actively involved. But that's sort of when we made the corporate sort of decision to go all in.
What did you see that was happening? Because, like you said, you made the corporate decision to go all in. You've developed funds globally, our index subsidiaries developed indices. What was it about the space? What do you see coming in the crypto space that you thought it was important enough to get your firm that was established in the 50s moving towards this new area?
It's interesting because it's really a two-step process. The first one was, and I think it is for a lot of people, understanding Bitcoin and then understanding how crypto generally could disrupt finance and other kinds of areas. So Bitcoin started appearing as a potential competitor to gold as people's portfolios. And so that was why I kind of did the deep dive in early 2017. Is this asking the fundamental questions? Why are millions of people investing in this? Could it go to zero? What are the risks? And a lot of those risks, you had to really understand what it was. And it's simply a transparent, open source or piece of software, database software. And then you had to understand the governance rules. Could it somehow be hacked? Could someone take over the network? Could miners take it over and reach these kind of different decision points? And, it seemed, after looking at those, it seemed very, very, very solid. And so I said, you know what, I don't know how important this is going to be vis-a-vis gold, but it's certainly going to be a complement in people's, what I'll call store of value portfolios. So that was the first step. And then the technology, I think what's exciting to me today is in 2017, people were talking about Ethereum and there was CryptoKitties and all the potential of the blockchain. It felt like a lot of talk back then and a lot of PowerPoint presentations, but over the last 3 years, especially this year, it's just amazing how many software projects are not only coming to the market, but also upgrading in a very significant extent. And that includes Ethereum, which we can talk about later.
Yeah, you talk about these as being software projects. Underlying a lot of these projects are what people have referred to as the blockchain. What are the blockchain opportunities that you see happening over the next 5 years or so?
Well, so let's just talk about disruption in finance. And so I see 3 major areas of finance being potentially disrupted. One is the banking and brokerage. The second is payments. And the third is banking and lending. And in all instances, I think the blockchain is, because of its transparency and because of its 24/7 nature, it can provide information and solutions that are available to people all over the world, and also are just better than the old financial infrastructure that was built on databases, COBOL databases in many cases, 30 to 40 to 50 years ago even. And they just don't reflect the ability of people to transact all day long, and also to incorporate what people call big data, massive amounts of information. So that's the overall thesis. Let me just run through each one, very quickly, because I think it's very evident that the market is seeing things the way I am. So take brokerage and exchanges, for example. Coinbase has come public. You can see that its market cap is almost twice that of NASDAQ. So it's both an exchange and it's also sort of a retail brokerage. And to justify its market cap, it's got to sell, I think, other financial products to its 50 million plus users. So it's a little bit baked into the price there. But people love the ability to execute all day long on that platform. Payments is probably the most interesting to me, and there is a revolution in payments that's not just crypto. So I guess the fairest way to put it is crypto is accelerating the disruption in the payments industry. But payments for so long was basically bank wires, which are obviously not very user friendly, but also the payment rails of MasterCard and Visa. And it was really impossible for people to kind of break through that, duopoly. Even things that I use every day, like Apple Pay, are really built on those payment rails. But it took crypto, I think, to kind of provide this whole structural alternative to that old payment system. And so you see a lot of PayPal and Square and Revolut and Bitso, and there's many payments companies now that facilitate cross-border payments, instantaneous payments to friends, whatever it might be. But I think without crypto, it wouldn't have happened as quickly, especially on the international side. So that's the payments revolution. And I think the most immature or early stage revolution is the banking and lending. There's this phrase, decentralized finance, which is basically lending on decentralized platforms. It's really only a year and a half or 2 years old, that revolution. I wouldn't say there's a market leader like there is in some of the other areas. I mean, arguably there is, but I'm just saying there's not one that's publicly listed and super well known. Let me put it that way. So those are the three areas where I think crypto is really transforming finance. And so you can take advantage of those investments by investing either in the private companies or in the public companies that offer services in those three vectors.
Now, in the financial services space, do you see perhaps some of the legacy financial firms eventually adopting this technology and absorbing it? Are you going to have whole new players, or will these big firms, these big banks, just eventually end up adopting that type of technology, and it will just kind of, that whole industry will just kind of be absorbed by traditional finance?
That's almost like yes, I think that's the narrative, and I'll get to it, but that's sort of like a second order thing. I think the biggest order thing is it's taking very profitable niches that the existing financial services companies have and disrupting them. Like the payments area, like the example I use. Jan, what are you talking about? Well, not so long ago, pre-COVID, right, I would travel to London, stay in a hotel. The hotel would have to pay my Amex fees of whatever it is, 2 to 3%. And then there would also be a spread on the foreign currency because the London hotel wanted payment in British pounds. That becomes, that really adds up. Or you think of remittances payments to workers in the US that are paid maybe to Mexico or in Central America, those fees are up to 6%. You can do that now for less than 1%. So it's disrupting the profitability model. That's why I think investors need to know about it when they invest in traditional financials. Make sure those companies are not rife for disruption. I do think the way you described it is it's a narrative of kind of back and forth and adopting crypto and not. So, that Square, for example, the Cash App, through its Cash App, does such a high volume in Bitcoin payments. They will start doing things that maybe some of the pure crypto firms are doing. And, Morgan Stanley, one of the big areas is what's called stable coins. So stable coins facilitate this instantaneous trading. So I guess it's in a way a facilitator for the brokerage revolution in crypto. But JP Morgan was an investor in Circle, which has the biggest stable coin. So they will get involved. They will start offering their own products, as you said. But I think, as I said, the most important narrative for investors is that profit centers are going poof in the night.
Do you think that crypto, in order to scale to that next level beyond just the crypto natives, needs to continue to be decentralized in the way that a lot of projects have been developed? Or I look at something like a JP Morgan that has developed, I think it's kind of more of a centralized type of blockchain to facilitate some transactions with some of their large clients. Where do you think that balance is between decentralized and centralized blockchains will be in the future?
Well, it's interesting. Consumers like ease of use. And, as many people point out, Coinbase, which is one of the most successful companies, is effectively a centralized solution, right? All the transactions that happen at Coinbase happen within Coinbase's ecosystem, and that not what they call it on chain or on the Bitcoin network per se. A lot of experts are saying that centralization will win. And certainly that's what corporations, profit-oriented corporations want. As an example, Square's acquisition last week of Afterpay is an example of these financial services companies trying to own the customer and then offering all the products to those customers. So I can see that happening. But it's going to be a big fight, right? Because you're not just going to have the financial players, but Apple is going to be in that picture. Goldman Sachs is going to be in that picture. So there's going to be a lot of, I'll call it centralized players, if you will, fighting for market share over time.
And now you mentioned Coinbase as an exchange, and they have something like, 50 million users. What does that say to you about seeing that level of engagement or that number of users at an exchange? Like, is that a demographic play? Is there a demographic story underlying this whole crypto space?
Yeah, it's just that I think, the younger generation, but I really think all generations are, I'll call it, mobile phone native, right? Smartphone native. I mean, if we're going to do something new, are much more likely to grab for our phones and find the app to do it. And that's how we want to kind of live our lives. Again, why? Because it's 24/7. The, crypto challenge to that is, I think it's an important comment to make, is you can go around the Apple Store or the Google App Store, because Apple takes whatever it is, 30% of revenue. That's a big toll. So that, again, is the beauty of crypto, where you can throw up these blockchain databases. People can do apps, and they can do it using a technology that challenges these centralized ecosystems that people try to set up, these what people are calling walled gardens that exist in the US and in China.
Do you think traditional exchanges have something to fear from a Coinbase?
I think they're missing out on a big market, number one. I ultimately think, again, to your point, a lot of securities transactions now happen on a T+3 or trade date plus 3 date or time delayed basis. And that's just really archaic, and it introduces a lot of risk into the system. And that's an unappreciated aspect of I think a lot of crypto blockchain solutions, is they actually have lower risk because a lot more stuff is transparent and a lot of it is instantaneous. And so like the Archegos hedge fund kind of blow up happened because of lack of transparency. A bunch of different banks were lending to the same firm without without that visibility, and that really blew up. So that's that narrative.
Maybe you could talk about that third pillar that you identified, which is lending in crypto, which has kind of come up over the last couple of years or so, and this idea of actually being able to earn a yield on crypto holdings. What do you see happening there, and what's the potential for investment in that space?
Yeah, I mean, when I look at the categories of opportunities from crypto, there's sort of Bitcoin, right, which is a store of value, which I really think is different from Ethereum and other smart contract software that enables a lot of what we've been talking about today. And then the last opportunity is income. I was at a very small Christmas party last December, and I was trying to explain to a fixed income trader like why he should care about crypto, and trying to explain what it was. And I said, do you know you can get income by lending, your Bitcoin, or even against, I'll call it cash-like, dollar-like instruments. And I think that was an aha moment for me, because I think people realize, wow, if I can get income from this ecosystem, that's going to attract a whole bunch of other people. Now, BlockFi has done a great job of using that feature to add a lot of customers and really blow up in size, which is great. But I think that lending or income opportunity is really early days. Anyway, that's kind of my quick answer, Ed, to the kind of whole lending, DeFi conversation, but I'm happy to dig deeper.
The regulation aspect of that, I mean, what are the risks of that business? I feel like some of that, there's been a little bit of a spotlight from a regulation standpoint. How are you thinking about that, either as a risk or as an enabler in future adoption?
Well, I think the number one regulatory demand of the crypto ecosystem is prevent money laundering, prevent terrorist use of these cryptocurrencies, right? So in the shorthand, that's AML, anti-money laundering, and KYC, know your customer. So rule number one is deal with platforms with good AML, KYC. Rule number two is deal with good platforms that have AML. You got my point. So the DeFi world, sort of by definition, does not have those protections. And so we are talking to some of the companies that are setting up, if you will, pools that mimic the technology. They're called permission pools, but all of the players in the pool have to go through an AML KYC process. So I would say for Van Eck and our clients, DeFi is good to watch from a distance, but we're not quite in a point where those AML KYC protections are set up. But once they are, a lot of the players should be willing to play. Like, I think 99% of the crypto players that I talk to are responsible, regulated, law abiding. So a lot of them should transfer to this new permission pool, but we'll have to see.
Can you talk a little bit about how that lending aspect works? Just a little bit of the mechanics so that people understand how that really works. I mean, you're using stable coins, right, in some part of that transaction?
Yeah, I mean, I think the question is, why are people borrowing? First of all, why are they borrowing, right? So they borrow in stable coins the same reason you'd borrow in dollars, right? So if you're a business in Mexico or in India, why wouldn't you want to borrow? Maybe you can't get a loan from your local bank. Why wouldn't you want to borrow, in the cryptocurrencies if it was easier? So that's the dollar-based lending. And then, well, why would people pay interest on Bitcoin? Really for a couple of different reasons. First of all, if you're an investor in Bitcoin, you have made a lot of money. And just like in the traditional world, you may not want to realize those taxable gains. So you may want to borrow. If you're a Bitcoin millionaire or have 10 million out of crypto, then you may not want to pay taxes and realize gains. You may just want to borrow some money against that. And almost anything substantially less than the capital gains rate sounds like a good deal to you. So you would be willing to lend that Bitcoin out.
So if I think about the space and all the different projects that are happening, trying to get a sense of the different investment opportunities. So you have some cryptocurrencies, say like Ether, which tend to be widely used within the DeFi space, but there's a ton of other projects. How do you look at this? Do you look at those individual currencies as investment opportunities in of themselves? Or are you looking at companies that are developing applications, servicing different niches of the economy as better ways of investing and getting exposure to the space?
It's software. Every piece of software can do lots of different things. So yes, number one, we have an effort to categorize the different kind of tokens that are out there. The category that's gotten a lot of my attention, and what I think is really the story of 2021 so far, is what we call smart contract protocols, which are basically, if people are familiar with the PC, evolution, I like to call Ethereum the MS-DOS of smart contract software, because it's the base layer one, whatever you want to call it, that kind of makes things work. It's the underlying blockchain, and then specialized applications can be built on top of it. So just like with your personal computer, email could be built on top of MS-DOS, obviously with other requirements, or spreadsheets like Microsoft Excel. databases, PowerPoint. That's all based on an operating system. So Ethereum is very successful as that smart contract, but there's other competitors to it with different features. Some are much faster and better for other kinds of software. So we think of it in terms of that category of software, Ed. And then there's obviously lots of other things. There's so many things going on. It's impossible to keep up. NFTs, non-fungible tokens, was a big thing that was built on top of smart contract software. But I think there are a lot of different applications being built on smart contract software.
Do you think that many different projects can exist together, or will eventually some years in the future have one or two main currencies? I guess we have a couple of main currencies right now, or cryptocurrencies now, but do you suspect there will be kind of a washing out of some of these projects as people start to adopt blockchain in general for business and life?
I kind of feel like there'll be two or three winners at any given category. I'm just analogizing from software in general, right? So if you think of smartphone software or just operating systems in general, right? A ton is built on, well, the Apple operating system or on Linux. So I kind of think you get the critical mass of developers that know that software, and then they build tools to build stuff on that software faster. That's already happening, massively. The only thing that would offset it, I think, is that software itself has become easier to use. There are more tools than they were 30 years ago. So you see this development called cross-chain protocols that allow interoperability between these kind of smart contract software. So that would be my hedge.
I want to go back and talk a little bit about Ethereum, if I might, because it recently went under some changes, didn't it? And how significant are these changes? I guess it's the London hard fork. Do you consider those changes beneficial for that ecosystem, and how beneficial?
Right. So you've had a couple of major, I call them upgrades because people understand software upgrades, I think, to Ethereum. And yeah, this one went so far as reflected in usage and things has gone very smoothly. And it's really a transition, as I understand it, not a one-time leap. Ethereum is moving from the Bitcoin miner kind of heavy energy use proof of work system to a staking system and validators. So that's I think for people on the outside in critiquing Bitcoin, that's really important to them. And then there's also features sort of important to users within the ecosystem, which is that a certain amount of Ethereum will be burned through every transaction. And so that kind of gives value back to the ecosystem instead of only going, all that revenue going to Ethereum miners. So again, that's a little bit of inside baseball, but I think the larger point is that Ethereum is the leader, and Ethereum is making enhancements, if you will, to its software to in response to demands and issues with prior versions. And so it's getting better over time.
So and I might be wrong in describing it this way, the changes to Ethereum in the terms of being able to burn some Ether, does that make it a little bit more of a store of value, a little bit more towards Bitcoin? And I'm probably using the wrong term for Ether in that case, but I know Bitcoin because it has a finite number of Bitcoin that will ever be produced. People talk about it as being a store of value. So I guess the follow-up question to that is, and I've heard you mention Bitcoin as a store of value today as well, is maybe you can explain that a little bit more, because I know we do get questions about how can Bitcoin be a store of value when it is so volatile?
So the whole exercise of the store value discussion is a little bit, I really have to put a big caveat in there, because what I'm really doing is mind reading. I can't point to a statistic and say, there was no poll that says I bought Bitcoin because it's a store of value, right? I don't know. Maybe they, really love the beauty of the node, the underlying network, and think, like I was saying, things are built on top of Ethereum. Things could be built on top of Bitcoin. as well. And maybe they're just saying, oh no, actually, I think Bitcoin's the best smart contract software. So I'm not a mind reader. So these are kind of generalizations and best guesses based on the narrative. And, narratives can be super important, right? Like Robert Schiller of Yale just wrote a book on, crises and how important narratives are. So I'm not trying to completely discount it, but it's really just a best guess from Jan is really what it is. So, that's when I put, Bitcoin into that store of value. I think it's just when I talk to investors, it's kind of, I think the reason they're buying it is the limited supply and the fact that it's hit critical mass in terms of use.
Outside of finance, you've talked about how crypto is disrupting finance. Do you see disruption or the potential for disruption in other industries?
Well, for sure. A lot of, I would say, software-oriented solutions are directly vulnerable. The problem is, that a lot of our life is governed by laws, rules, and regulations, and that it's typically those that limit the use of open source blockchain. So that's kind of the lens I look at. So real estate, obviously, it would be so much better if real estate were just put on the blockchain. You could reduce so many costs in the system, but you can't do that if the legal systems, if the rules around land ownership and zoning and blah 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 title aren't somehow made open to the blockchain. So those are the limits on disruption.
You're a big art guy. What did you think of the whole NFT craze that was going on? And perhaps the ability of artists then now to be able to use smart contracts to maintain rights over their artwork. And I guess you've even seen some potential in the music industry for like music royalties and such.
It's nothing but pure joy to watch that. I think for me, number one, because it's just a celebration of the fact that people can use this open source blockchain technology for a whole variety of different ways and without needing the traditional art gallery, art museum world to buy in at all. They were, if anything, super late to the party. So, just a celebration. I wouldn't call myself an art guy, by the way, but I do like looking at the at the art market. It's kind of an interesting thing to watch because it's pretty unregulated, and I think there's a lot of gamesmanship in it. But I view it as that's how I like to watch the art market. But I think getting back to maybe one thought on how art might develop, I can see that you could have a physical painting that has associated NFT rights. And so you can limit it. It's almost like special editions of records or what have you, and having 50 or 100 different NFTs officially associated with that work of art. And, I think, in the future, maybe we don't have a work of art on our wall. We have a TV monitor and we just throw up different things at different times. So there's some collectibles companies like Rally Road that are working on, on that. The one thing I point out, though, to Chairman Gensler's, comments, some of these are securities. So I think that's a really important area of inquiry, if you will, to make sure that if you're an investor and you're investing in these companies, that they've done their legal homework.
So let's talk a little bit more about the legal side of things and the regulatory side of things. What's your take on some of the latest headlines in terms of, say, crypto as part of the infrastructure bill? What really needs to happen there? Should it be part of infrastructure?
Well, I think the first comment is it's not like there wasn't enough stuff happening in the crypto world already that made you feel like you were falling behind every day. But now with the regulatory stuff over the last 2 weeks, I just feel like there's not enough hours in the day for anyone. To answer your question, I think it's actually been a really, really positive 2 weeks. And I'm a glass half full guy, so you can qualify my comments with that caveat. But the fact is that really all the IRS was asking for was that platforms like Coinbase or Gemini provide tax reporting to the buyers and sellers of crypto investments, which basically is an obligation that they were fulfilling anyway. actually the forms and the reporting will actually be easier for some of us that have had to do that manually. The question was how in that bill was how far was it going to extend into the rest of the DeFi and other worlds, like were miners going to be affected, were software developers going to be affected. And I think even though the amendment was not added to the infrastructure bill, one of my colleagues, Matthew Siegel, pointed out that there was a kind of a colloquy on the Senate floor where one Republican and one Democrat senators explained that they thought that some of these areas like non-custodial wallets were not what was envisioned in the kind of official bill. So that gives regulators a lot and courts a lot of guidance, and that's really positive. I mean, that's really good clarity at the end of the day if we go from that. And so I think that's part of the reason that Bitcoin, Ethereum, and others have rallied over the last week. That it's kind of it's hard to explain to the average person, and maybe my law school background helps. So how does it then when you didn't get a law passed, you actually kind of de facto got it passed, right? And it's like, it doesn't make common sense, but anyway, so that's kind of my glass half full takeaway.
I'm going to start pulling from questions that we've gotten, just kind of on the headlines aspect. Can you speak to the higher risk of hacking, including the recent record-breaking $600 million hack on the Poly network?
I think there is a concept that we're working on where some protocols are more of just higher quality than others. And that would include code audits. It would include regulatory compliance. It would include the number of projects that might be associated or use of that blockchain. Obviously, the hope of the community and myself that the big centralized players like the Geminis or the Coinbases don't get hacked, and they haven't been, and the custodians just generally haven't been hacked. So that was a really bad big headline, but I think in the context of an ecosystem being relatively safe for its user base, that's kind of how I would look at it.
And one of the other big headlines in recent months actually has been the whole ESG angle. So one of the questions we have here is crypto mining and transactions use a ton of energy. How will the industry deal with this issue? And is this a long-term problem for the space?
Even though I use crypto a lot, I think you usually shouldn't. And so in this case, you shouldn't. It's Bitcoin, especially now, that uses energy intensive mining, and most every other coin does not. And especially the payments tokens. So Bitcoin uses about 0.5% of the world's electricity. It will always use electricity because that is how it is secure. And that's why people have trust in it, I think, to a large extent. The question to me isn't electricity or not, because we are moving into, if we're going to move towards net carbon zero, we will use electricity. Everything will use more electricity. Our cars will use electricity, to pick the obvious example. So that's not the question. The question is, what's the source of that electricity for Bitcoin? And Bitcoin, although it uses 0.5% of the world's electricity, it only uses 0.1% of the carbon footprint. So I think the Bitcoin mining community, especially in the United States, is moving aggressively towards using renewables and zero carbon sources of electricity for Bitcoin. I think it kind of heard the concerns and is reacting to them. And I can see in 2 or 3 years where Bitcoin will be 100% renewable. Maybe not 100%, but largely that way. And so then that concern kind of goes away.
Yeah, do you think a lot of that was helped by China's crackdown on the crypto space there, and kind of shutting down a lot of those miners there and having them move offshore?
Yeah, I mean, if you look at the Cambridge University Business School study, I don't recall specifically, Ed, but I'm pretty sure that Chinese miners, certainly they used some coal, but they also used a lot of hydro. So it wasn't, as black and white as one might think.
All right, there was one question that came in earlier that you liked. So I'm going to give you the opportunity to address that. Do you have any hardcore facts on the adoption rate and use of custodial and non-custodial cryptos in the EU, China, Russia, and the USA?
So I don't have direct count or know where I could get that information on wallets, but what I liked about it is it's just a question about usage in general. So if you look at the transactions between Bitcoin and Ethereum, just to go back to my overall theme, it's actually interesting. The on-chain Bitcoin transactions are about 400,000 a day, and that hasn't changed a lot over the last several years, which I think is interesting. But if you look at Ethereum, the Ethereum transactions, the total amount of transactions on the Ethereum blockchain is in the trillions annually now. And the number of transactions and the value, I think my colleague estimates is going to be 18 billion or so of Ethereum revenue based on ETH transactions this year. So just ballpark it, that's a big number, right? So getting into other ways of measuring use of decentralized versus centralized finance. So Uniswap is one of the biggest decentralized DeFi platforms. And it's got, I think, over 1 million users, is one of the biggest users of Ethereum. So after this Ethereum upgrade that happened in the last week or two, Uniswap is one of the biggest, if you will, burners of Ethereum or cause of Ethereum to be burned. And so that gives you an indication that DeFi is well and alive and gives you some sense of the numbers that might be associated with the question.
And there's a question that kind of speaks to valuation a little bit. And I'd love to get your take on how you either rationalize the value of Bitcoin, Ether, or some of these other cryptocurrencies. But the question specifically was, have you considered that the idea that Bitcoin or cryptocurrencies may become worthless or almost worthless? What are the chances of that happening? I think there's a question about valuation there as well. Just, what is really given it its underlying value?
Right. So as you expect, different answers for Bitcoin than other open source blockchain protocols. So Bitcoin, I think, is a little bit like an art collectible or like gold. It's driven by investor demand. So I think valuation is very difficult, but the way I put it is that if Bitcoin is going to be a competitor to gold and gold has 10 trillion of market cap, why wouldn't Bitcoin be something relative to that? So I use the number half of that. So it's still got quite a ways to go in my mind. I mean, I do think that Bitcoin is a maturing, evolving asset, and I can see a day where it's done its thing and people use it as a store of value. Its volatility has fallen and it becomes boring. Now, Ethereum and a lot of the other tokens and companies are completely different. You're looking there at transactions, transaction value. What's the revenue associated with use of those protocols? Because most of them have revenue. And so, like a growth company, you could judge it based on sales.
Yeah, I definitely see. It's interesting to see how Ethereum is being adopted by all these different applications, and there's a lot of different use cases for it. Definitely interesting to me.
And Ed, I hate to interrupt your question, but I do want to point out that we have information on our website about the use of Ethereum. And Matt Siegel writes a great blog just on an ongoing basis talking about the disruption in the ecosystem. So if investors want to get more information, we really invite them to look at that content.
The SEC and FINRA are looking at digital and crypto. We always get the question about the potential for an ETF, for instance. I mean, what are your thoughts about the way the SEC, for instance, is approaching the space?
Look, it's a very rapidly evolving space, right? And so the regulators, and we try to engage with them in a productive manner, are trying to be careful and pursue their mission of protecting investors. you have to prioritize things. And, Chairman Gensler gave a talk last week that, to me, kind of gave the right emphasis, which is, look, Bitcoin's established, right? It's not a question of whether it's a thing, it's a thing. You may not like it, you don't have to buy it. But whereas what's happening in the crypto ecosystem has a lot of different regulatory questions attached. And so I would agree that regulatory thought and policy thought should be focused more on stable coins and DeFi and some of these edge areas and newer areas, rather than the Bitcoin network. So, as far as funds that are being approved, let's just take a step back. How are investors, participating in the ecosystem? And I think I gave you the Bitcoin income and then growth company. I just think get involved in the growth area, and you can do that either by investing in a fund or an ETF that invests in public companies. I think that's very legitimate today. Obviously, a lot of people own ethereum directly, or through a fund. There's, as I said, there's other protocols I think that are potential competitors to ethereum. So from an ETF sponsor, you'd expect me to sort of ultimately say the best thing is to buy a basket. We can't offer that in the US today. So, be it as it may. So, that's how I kind of look at the kind of priorities. I will say, and this, this is coming, I have a strong feeling that the regulators should approve what I'll call a physical Bitcoin ETF, rather than one that invests in Bitcoin futures. We have 50 years of commodity investing experience at Van Eck, and we know that a lot of investors really don't understand the way futures curves operate that well. And all we say is, look, they can mean the performance of a fund can deviate dramatically from what you're expecting. So in 2006, crude oil commodity futures funds deviated by 20% from the performance of oil. And if you had a Bitcoin futures strategy, and there was a fund available last year, because of the shape of the curve in an upwards market, it underperformed Bitcoin by 20%. That's not what investors want, So that's my regulatory wish. And hope that if they're friendly towards Bitcoin, that they not just approve futures-oriented products, but also funds that invest in the underlying, because it's better investor protection, to put it in regulatory terms.
Yeah, it's fascinating to me that hasn't happened, or I'm sure they've considered the alternatives, like you said, with the roll cost of futures and closed-end structures. So I guess we'll have to see how that all plays out. I know we're running a little bit out of time, but I want to ask you another great question that just came through. It kind of alludes to the central bank, digital currencies. And the question is, when global central banks force all these cryptos worthless, a big assumption if you agree or not, the store of value is total BS, blockchain technology has value. Well, I guess the question really is, will the development of central bank digital currencies force all these other cryptos worthless?
Well, first of all, hopefully people buy into the three areas where finance is being disrupted. There's the brokerage, right? There's payments, and there's lending. So I think that central bank coins are really aimed at the payment space rather than anything else. And so it's only a part of the overall picture. So the whole house of crypto, if you think of it as a house of cards, which I've tried to persuade people, it's not one thing. It's a whole bunch of different things that use one kind of technology. I don't know whether the lawmakers will force people to use central bank currencies. Even in China right now, they're not forcing them to. There has been already pretty rapid adoption. I think there's 20 million wallets that use the Chinese central bank currency. I personally do not want all my financial transactions to be known by the federal government. And I think that a lot of people will have privacy concerns. And so I can't imagine the whole payments infrastructure of the US being built on top of a central bank, a Fed coin, or whatever it might be. But that's not to say that it can't facilitate certain areas of payments. But that's kind of my view.
What are some of the most interesting developments right now in either the DeFi space or the cryptocurrency space? Are there certain projects that you're investing in?
Well, as a firm, when we got enthusiastic about crypto, we decided that we want to invest in the ecosystem. And because it was really hard to roll out funds in the US, we did do a lot of investments, Ed. I like early stage companies right now. There's not one because they're so risky and you never know if they're going to succeed. But, we're investing in a couple of funds in that area, not controlled by Van Eck, but just with other people. I do think that in the I don't know what you call it, later stage, Series B, C, and D companies, these big private unicorns, the valuations are kind of crazy. There's such a multiple of sales, 10 to 20 times sales. So there's not a ton of value there. I think in terms of what I think is really interesting, I do think these permissioned pools set up to kind of do the online lending is the most interesting area. Online lending in a AML KYC compliant way, because I think the other areas, payments and brokerage already, and exchanges are already, kind of seeing leading companies and a lot of revolution and tens of millions of customer adoption already. I think DeFi is kind of the early stages, so that's a little bit more fun to watch.
So if you're a total crypto, blockchain, Bitcoin, Ethereum newbie, as one question comes across, what resources would you point people to? What books, podcasts, personalities? Who do you listen to?
I have yet to do I gave a presentation a couple of months ago. This was really fun. I meant it to be sort of a Bitcoin 101. And there were about 30 people on the call. And afterwards I said, I really want some feedback. I really want feedback. And the two comments I got is, okay, we were wrong. We didn't want the 101 version. We wanted the fifth grader version. I'm not sure that really exists now. It's still on my to-do list. I think trying to understand, hopefully this talk has been helpful in understanding why it's important. And then in terms of understanding the technology, I think it's really hard. But think about the Bitcoin network is simply, it's 100,000 computers around the world running a payments network. And they all have a copy of all the transactions that have ever happened. And they're all updating their software regularly. And it's just a way to send money to each other. That's it. And no one can stop it or control it. So that's kind of my attempt at a short version of Bitcoin. All the other stuff gets very lingo and it's hard on the on-ramp stuff.
All right, so we only have a few minutes left. There's a ton of questions. We will try to respond to some of those questions either through a blog or FAQ, maybe respond personally if we can. But I want to wrap up with a couple things. Since this is a podcast about trends, I typically ask guests what they see playing out over the next several years. What is one long-term trend that you see playing out over the next several years? It can be exactly about what we're talking about, but since you run an asset management firm, which is in a lot of different asset classes, is there something else top of mind for you?
I think everyone understands that technology disruption trends that are happening. What's top of mind for me is the only value area in the investment area to me is sort of natural resource equities, just because I think that global growth will be enough to keep commodity prices higher. And because people are concerned about everything being done in a more climate sensitive way, I do think it'll be hard to bring supply on stream, but demand of green metals like copper and things like that is going to be so high that I think that's an okay place to invest because you're also getting paid high dividends. So I don't mean to not answer your question, but the biggest top of mind thing for me right now is actually uncertainty about what the stimulative policies in the US are going to lead to. And I just don't think we know. And people say, is inflation transitory? And my answer to that is, I don't know. And I don't think we'll know whether wage increases are going to be baked into the system. We'll know in a year. We'll know it is in the second half of 2022. So, investors don't like uncertainty. And I'm definitely trying to figure out whether I think uncertainty is going to be increasing just because we don't know what the consequences of these policies are going to be.
All right, so let's kind of wrap it up with your one statement, your one takeaway statement for the case for cryptocurrencies disrupting the financial services industry, what do you want people to really take away from this discussion?
Open source software databases are transparent, so everyone can see what's going on, and they're instantaneous. And you don't need Apple's permission or any other gateway's permission to build applications on top of it. So it's great for innovation and disruption of existing ecosystems. So that's my three cheers for that technology.
So do you want to try the speed round, trend or fad?
Can't wait. Been waiting all day.
We'll see. NFTs, trend or fad?
Fad.
Hydrogen, trend or fad?
Trend.
Orange wine, trend or fad?
Gross. Fad.
Lab-grown meat or alternative proteins, trend or fad?
Trend.
And then one of my favorite ones over the last year or so, Peloton, trend or fad?
Fad.
Well, Jan, this was awesome. Thank you very much for your time. What's the best way for people to find you, follow you? Do you have a Twitter handle?
Yeah, Jan van Eck 3. I guess I was a really late Twitter adopter. It's the number 3. Also would solicit feedback on this kind of slightly more open, kind of podcast format. If people liked it, we want to provide user-friendly information. So if you have guidance on how we can do that, your feedback really is appreciated by me.
Just as long as not like get rid of the host, but the content would be great. Thank you very much. And thank you for tuning in to another episode of Trends with Benefits.